Good morning. Time now 8 o'clock in the morning. After a few minutes, 8 o'clock in the morning in Tokyo. Tuesday, November the 2nd, 2021. Welcome to another edition of the World Bank Group morning seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. We organize many interesting seminars starting at 8 o'clock in the morning in Japan Standard Time, introducing the latest report presented by the World Bank Group economists and specialists. Every spring and fall, 6 regional chief economics offices of the World Bank issue a half-yearly regional economic update, typically consisting of the macroeconomic overview of the region and deeper analysis of the key strategic topics. For 2021, in fall timing, we introduced already a EAP Africa South Asia regional economic update in the last several weeks. This morning, we are featuring Europe and Central Asia. Connecting from Washington, we have Dorothee Singer, the senior economist in the office of the chief economist for the Europe and Central Asia region. Dorothee, good evening, good morning to you. Thanks for joining. Can you hear us?
Thank you.
Great. Thank you very much. Dorothee is one of the co-authors of the topical part of the report, Competition of the Firm Recovery Post-COVID-19. We'll listen to Dorothee presenting the main point of the report in the next 40 minutes. I'll read your questions after her presentation. If you did not have opportunity to send your question in advance, please send yours during the seminar, or you can simply post your question on the YouTube screen in the chat section. So I'll read your question, asking Dorothee to respond after her presentation. So with that, I'd like to ask Dorothee to come in to start her presentation. Dorothee, over to you.
Thank you, Koichi, and thank you for the kind introduction. Let me share my screen with you. Let's see. Okay, can you see my screen? Okay.
Thank you.
Great. Well, good morning, and thank you very much for the opportunity to present at today's seminar. I'm delighted to share some of the findings from our most recent Europe and Central Asia economic update. The feature chapter this time was on competition and firm recovery post-COVID-19. So to state the obvious, economies around the world have been hit hard by the COVID-19 pandemic, of course. In 2020, global economic activity contracted because of the pandemic, resulting in the deepest recession since the Second World War. Although economic activity is recovering, and output in Europe and Central Asia is expected to grow in 2021, containing COVID-19 remains a challenge in the region. Indeed, emerging Europe and Central Asia is one of the most hit region by the pandemic in terms of per capita death rates and case rates. At the onset of the pandemic, the rapid spread of the disease and movement restrictions and lockdowns imposed to contain the virus led to sudden supply and demand shocks, which manifested themselves in declines in output and productivity. The widespread uncertainty due to the pandemic, as well as concerns about increasing financial sector distress, compounded those shocks. So how did firms fare during the crisis? Well, this economic update builds on the ongoing work the World Bank is doing with enterprise surveys, COVID-19 follow-up surveys, to assess the impact that COVID-19 has on firms in the region with a focus on competition. So why the focus on competition? Well, competition is key to sustainable long-term economic growth and contributes to greater dynamism. It contributes to growth through 3 channels. First, by incentivizing firms to innovate and become more efficient, what we call productive efficiency. Second, by shifting resources towards more efficient firms, also known as allocative efficiency. And third, by forcing less efficient firms to exit, more efficient ones to grow, and new ones to enter, what we call market contestability or creative destruction. So competition is important, but at the same time, COVID-19 has heightened concerns about limited competition. In particular, the concern is that if smaller firms find it more difficult to adapt to the crisis and/or receive less government support, and are thus more likely to exit, concentration and dominance of large firms may increase and further limit competition at a point where it's just needed the most to promote economic growth and recovery. So as ECHA starts to recover from the COVID-19 crisis, it will be important to ensure that a competitive business environment is in place to jumpstart economic growth. To give you an outline of this talk, along the way the ECHA economic update is also structured, I'll go through 4 main points. The first one is what we illustrate in the economic update, the competition landscape in ECHA pre-COVID-19 to kind of set a benchmark for the region. We then explore the impact of COVID-19 on firms, including in different competition environments. And here we really try to answer 4 questions. First, how did COVID-19 affect firms' growth, employment, and technological adaptation? Second, did the impact vary by firm characteristics such as size, age, sector, and gender of top manager? Third, is there any evidence of creative destruction so far, with resources allocated to firms that are more productive? And fourth, how did the competition environment influence this reallocation? In the third section, we then describe government support initiatives in the region and identify which firms received them. And finally, we conclude with policy recommendations for competition and recovery. So let's start with the pre-COVID competition environment in ECHA. We characterized the competition environment by 4 measures. Those are country-level measures, all 4, and the first 2 come from the 2020 Bertelsmann Stiftung Transformation Index, which surveys political and economic transformation around the world based on expert opinion. So it's basically a de facto measure of competition environment because it takes into account both the laws and regulations which enable competition, but also the enforcement. And so specifically, we look at 2 subcomponents here which provide information on the competition environment. One is market organization, which captures the degree to which the market is developed in a country. And second, competition policy, which captures the extent to which competition policy is enforced. The next 2 measures that may be associated with the level of competition are proxies for the size and share of the public sector, and they are the share of public sector employees in total employment and the share of public banks in total banking sector assets. And the idea of them being proxies is that when the influence of the state in the economy is relatively large, competition can often be lower and dynamism can be limited. So looking at the pre-COVID competition environment based on those 4 measures, we find that for the 2 BTI variables, the average score is 7. It's measured on a scale from 1 to 10. So competition is certainly there. It varies across sub-regions in ECHA, as you can see there. When we look at public sector employment, the share is 24%. Again, large variation across countries. And similarly for the public banks share, which is on average 18% in ECA. Now, when we look at the relationship between competition and labor productivity in the region, we see that in countries with a more competitive environment, firms had higher productivity as measured by sales per worker in 2019 across countries in ECA. And so the two figures you see here is we sort countries into low competition and high competition environments based on the median, and we see by those distributions that the distribution scores towards more productive firms in higher competition environments. Now, on to our second part. What is the impact of COVID-19 on firms? So our analysis, as I just mentioned, is based on data from the World Bank's enterprise surveys, COVID-19 follow-up surveys, which were conducted in 23 countries in ECA. The nice thing about those data are that they specifically asked firms about changes in performance compared to a year ago or since the onset of the COVID-19 pandemic. And so in our data set, we have data for 2 rounds of data. The first round was conducted between May and November 2020, and the second round conducted between November 2020 and May 2021. Many of you might be familiar with enterprise surveys data based on the regular work they do. And the nice thing is that those COVID-19 follow-up surveys were based on the same sample frame as the regular enterprise surveys the unit conducts regularly. So we're able to link the COVID-19 follow-up surveys with the pre-COVID-19 enterprise surveys for a rich set of firm characteristics, including productivity. And so let's look at some of the impacts that COVID-19 had on firms. Starting with sales, we see that firms in a region faced sustained revenue losses during the pandemic, although the average drop in sales was smaller compared to other regions. So I should say that I'm just starting with showing some summary statistics we have based on the data, and I'll move to some of the results we have based on regression analysis later on. But basically the findings we have here in terms of just from the simple summary statistics basically also hold in a regression analysis context. So sales fell about 24% in terms of monthly sales to 1 year earlier, both in the first round and in the second round. We also see an impact on employment, digital adoption, and firm exit. So when we look at the decline in the number of full-time workers in ECA, we see that firms were, the impact was more muted than the drop in sales. And that's also something we observe globally. So compared to December 2019, firms reported an average drop of 10% in employment. By round 2, that was a little bit larger at 13%. One of the reasons why firms might have had experienced a more muted effect in terms of employment is that firms had a variety of tools to adjust their workforce, right? They could grant leave, reduce hours, lower wages, and some of them also benefited from wage subsidies, something we explore a bit later on in the presentation. In terms of digital adoption, we saw that about 1/3 of firms started or increased online business activity or started or increased remote working arrangements. These show great initiatives to adapt to changes, but it's also important to realize that they may have limited impact in weathering the crisis, since the average percent of online sales was only 8% and of remote was only 7% in the sample. In terms of exit rates, firm exit in ECHA was relatively low, an annualized rate of about 1.9% in ECHA compared to 6.2% globally. However, it's important to realize also that the surveys were conducted, while the crisis was still ongoing and firms were still adjusting. And so when we look at firms that were in financial distress, by round 2, about a quarter of firms reported anticipating falling into arrears on outstanding liabilities in the next 6 months. So we expect a lot of more firm exit going forward. Now, when we look at some of the impacts of COVID-19 on firms by firm characteristics, we see heterogeneous impacts. We see that smaller firms were hit harder than larger firms. So smaller firms experienced large drops in sales and employment, and the figure you see here is on sales. We have a full set of figures by all characteristics in our report. There were just too many figures to simply include in the presentation, so I encourage you to seek out the report if you're interested to see the numbers along all dimensions and by all characteristics. What we also see is that smaller firms were less likely to reduce their workforce than large firms, and small firms also faced greater difficulties in recovering as more expected to fall into arrears than larger firms. When we look at the impact by sector, we see that varied quite a bit. We can look at manufacturing, retail, and other services in our sample. And we see that the services sector experienced a higher drop in sales and employment. This could, of course, be due to the lockdown and travel restrictions imposed by the pandemic, which hit services relatively harder. But while sales recovered in manufacturing and also in services, sales dropped in retail sector between rounds. When we look by firm age, we see that youngest firms were affected the most. They experienced the largest drops in sales and employment, and they were also more likely to fall into arrears. On the other hand, we see that to mitigate losses and adapt to the new normal, younger firms started or increased online business activity the most. And perhaps that's not surprising because we think of young firms being more nimble and more likely to adopt new technology. Finally, we can also look at the impact of COVID-19 on firms by the gender of the top manager. And there we find that female-run firms had greater difficulties compared to firms run by men. So despite a similar initial drop in sales, firms with female top managers experienced further losses by round 2, while male top managers recovered in round 2. We also see that female-run businesses had higher drops in employment and were slightly more likely to anticipate falling into arrears. Now on to the next question. Is there any evidence that, is there any evidence that so far that there's creative destruction with resources allocated to firms that are more productive? And the answer is yes. When we do regression analysis, we show that firms with a high pre-crisis labor productivity experience smaller drops in sales and employment than firms with low pre-crisis labor productivity. More productive firms were also more likely to adapt to the crisis by increasing online activity and remote work. To give you a sense of the magnitudes that these effects have, we can compare firms in the 19th percentile with those in the 10th percentile of pre-crisis labor productivity. So when we look at those at the low end of the spectrum of labor productivity, we compare to those in the higher 19th percentile, we find that the low productivity firms experience a 12 percentage point larger drop in sales, experience a 9 percentage point larger drop in employment, were 14 percentage points less likely to have increased remote work, and were 11 percentage points more likely to anticipate falling into arrears. So productivity of firms clearly matters in terms of the impact that firms experience due to COVID-19. Now, what about the role of competition? When we introduce competition in our analysis, we find that ECA countries in which with more competitive markets and stronger policies that protect competition, there was more reallocation of economic activity from less productive to more productive firms. So more competition, more reallocation to more productive firms. And that holds true both for when we measure the competitive environment by our measures from the Bertelsmann Transformation Index, but also when we look at the share of public employment and the share of public ownership of banks. Now, to illustrate that, let me give you an example of how reallocation to more productive firms works in a stronger and a higher competitive environment. So, for example, when we look at firms in countries with high competition and compare high productivity firms to low productivity firms, we find that compared to high competition, low competition firms experience a 17 percentage point larger drop in sales. And this difference is only 10 percentage point in low competition countries. So when you look at the figures, you see that illustrated by the slopes of the two lines you see here, where the dark blue slope is for high competition countries and the light blue slope for low competition markets. And you see the slope for high competition markets is much steeper, illustrating that in competition, the relationship is much stronger. And that holds true across all of our indicators of outcome. The results we find in terms of productivity and the impact of competition are consistent with results exploring firm exit rates. And although confirmed exit rates in ECA were relatively low, as I mentioned earlier, at 1.9% on average on an annual basis, analysis by my colleagues in the Enterprise Surveys Unit suggests that less productive firms were more likely to exit during the crisis. Now, whether the reallocation of economic activity toward more productive firms is long-lasting will, of course, depend on whether more productive firms grow and less productive firms ultimately exit. And exactly to facilitate that, for faster firm exit and further job creation for productive firms, strengthening the competitive environment and regulation is key, as our analysis suggests. Now let me move on to the third section of the report, government support measures. As you all know, in response to the economic crisis facilitated by COVID-19, governments around the world provided support to both households and firms. Support to firms was provided in order to prevent mass insolvency and bankruptcy of viable firms facing financial distress and related knock-on effects for the financial sector. And that was all to prevent losses of jobs and firm-specific intangible capital and to reduce the friction costs of firms temporarily exiting the market. The World Bank has kept track of all the government measures implemented to support firms through its SME support dashboard, one of the many dashboards it acted to track government policies during COVID-19. And according to that dashboard, countries in ECHA enacted more than 430 measures to support SMEs in response to COVID-19. The 5 most common measures were credit, fiscal relief, wage subsidies, payment deferrals, and cash grants. Now, thanks to the data collected by our colleagues through the Enterprise Survey's COVID-19 follow-up surveys, we can also look at what government support actually reached firms. So how many firms received what kind of government support? And there we see that in ECHA, wage subsidies were the most widely received support reported by firms, reaching 40% of firms by round 2. And so although new credit was the most common measure according to the SME support measure dashboard, it only reached 5% of firms. Overall, when we look at government support in general, we find that by round 2, half of firms in ECHA reported having received some kind of government support. So what do we know about who actually received government support? What type of firms? When we just take a cursory look at the support allocation by firm and by firm characteristics such as size, sector, age, and gender of top manager, we find actually not much difference. It pretty much looks the same across different firm characteristics. However, unlike the earlier work we did for the impact of COVID-19 on firm performance, we find that a more careful look reveals some interesting patterns. Namely, our regression analysis shows that more productive firms were less likely to receive any government support. Yes, you heard that correctly. More productive firms were less likely to receive any type of government support. In particular, firms in the 10th percentile of pre-crisis labor productivity were 6 percentage points more likely to receive government support than firms in the 19th percentile. Larger firms were also more likely than smaller firms to receive payment deferrals and fiscal relief, one of the worries I stated at the very upfront of the presentation. Firms with female top managers were 5 percentage points more likely to receive government support than firms with a male top manager. We also find that pre-crisis innovation is not correlated with receiving any government support. So let me finish in the last couple of minutes of my presentation with summarizing some of the results I've just shared with you and the policy recommendations that come from them. So overall, our findings suggest that the COVID-19 crisis had a profound and heterogeneous impact on firms. We find that a competitive business environment is key for sustainable long-term economic growth. In particular, we find that before the pandemic, firms' labor productivity was higher in countries with a more competitive environment. During the crisis, economic activity appears to have been reallocated towards more productive firms, especially in countries with more competitive markets. More productive firms were also more likely to adapt to the crisis by increasing online activity and remote work. But whether the reallocation is long-lasting will depend on whether more productive firms grow and less productive ones ultimately exit. Again, this may depend on the competition environment based on the analysis we have undertaken for this economic update. When it comes to government support measures enacted to counteract the effects of the COVID-19 crisis, we show that whether intentionally or not, the broad COVID-19 support measures governments provided disproportionately went to less productive firms, irrespective of their pre-crisis innovations. Now, again, The game early on was to get out help quickly, to help support them, but obviously this has implications going forward. As economies enter the recovery phase, it will be important for policymakers in all countries to phase out policy support measures and focus on fostering a competitive business environment, which so far might have been undermined with the policy support that went out. We know that a competitive business environment is key to a strong recovery, resilience to future crises, and sustainable long-term economic growth. We therefore come to the following policy recommendations. First, better targeting of government policy support measures going forward is needed. In particular, broad indiscriminate policy support schedules should be phased out as soon as appropriate and targeted to the most productive firms going forward in order to avoid propping up zombie firms and to limit fiscal resources as needed. Second, ensuring that policy support measures do not lock in market structures that undermine competition. And here, we really talk about that support measures should be designed transparently and subject to accountability so that the risk of distorting market incentives or crowding out market players is minimized. Governments should also take this opportunity to review the economic rationale of SOEs, state-owned enterprises. Many countries in ECA have many of those, so this is particularly relevant, of course, to ECA, but also to other countries. And consider whether government support to them is the most efficient and the most best use of limited resources, especially if those enterprises had structural viability issues even before the crisis. Third, strengthening insolvency and resolution frameworks to enable improved firm exit. As a result of the COVID-19 crisis, many firms will need to restructure their debt, while others will need to be promptly resolved. And so improving insolvency resolution frameworks is needed across the board. At the same time, it's also important to enable improved firm entry and growth, to enable more productive firms to grow and enter, to facilitate the reallocation of resources towards long-term economic growth and transformation. Finally, and fifth, ensuring the financial system remains well capitalized and liquid. And that's because a strong financial sector is a vital part of the competitive business environment, facilitating healthy entry, exit, and growth. So let me stop here and say thank you, and I'm very happy to answer any questions there might be.
Thank you very much, Dorothee, for your presentation, giving us a snapshot of the latest edition of ECA Regional Update. We received several questions from our viewers in advance, and one question just came in during your presentation. So let me start with questions that we received in advance. Question from Nakatani-san. Thank you for your question. What about situations of vaccine rollout in the region? Is it going smoothly regionally or facing with bottlenecks? It seems the level of vaccine rollout is having a major impact on the economic recovery and sustained growth in other regions. Is this the same for ECA regions? This is the first question. Dorothee, please.
Thank you for that question. Obviously, as long as COVID-19 is with us, it does have an economic impact, as we've seen in ECA, but also around the world. Vaccine rollout in the region remains uneven, but I should also say that I probably can't really say much more. I'm not an expert on this topic, but if there's interest from the audience on that, please contact me directly, and I'm happy to connect you to my colleagues that know much more about the vaccine rollout in the region.
Okay, thank you very much for your comments, Dorothy. Next question, next two questions actually from Sasaki-san. Thank you for your question sending in advance. First one, on the slide 12, what will be the main reasons of female-run firms having greater difficulty recovering? Do you find any country-by-country tendency or differences within the region? On the slide 20, firms with a female top manager were receiving more government support. Any views on the reason for this point? So this is the first question. Any comment, Dorothy, please?
Well, thank you for that question. So as you noted, those are very interesting results by gender of top manager, and it's something we haven't explored in too much detail yet, but we're interested to look into more. So right now I can only speculate, but based on what we've seen is that women tend to be more likely to be in the service and retail industry compared to manufacturing. And we've seen that the crisis impacted those sectors differently. So services and retail were hit harder. So to the degree that women are more likely to be in those sectors, that would be one explanation for that. In terms of them receiving more government support, that's one possibility is that because their firms were impacted more severely, they received more government support because of that. Unfortunately, because of the way our data is structured, we don't know the timing between the decline in sales or decline in employment due to COVID-19 and when firms receive support, government support. So unfortunately, that's not something we can look at in detail. But as I said earlier, one hypothesis that we still need to look at detail in the data is that female-run firms basically cluster in different sectors that were impacted more severely by the COVID-19 crisis, and that's why we think women-led firms were impacted more severely.
Thank you for your responses. Let me continue reading his second question. Would you please introduce some examples of World Bank's support to government to foster a competitive business environment in ECA region? In ECA lending portfolio, how much share percentage would such support have currently? Would it be a big or small or growing? How is the World Bank collaborating with other multilateral and bilateral donors in this regard? So please, Dorothy, if you have any comments.
Yeah, again, thank you for that excellent question. The World Bank is active throughout the region in terms of, providing advice and financing to support a more competitive environment. You've just heard me talk about like those 5 policy areas where we see action needed. And indeed, the World Bank is active in all 5 dimensions. So when we talk about targeting government policy support more going forward, the World Bank, for example, is working across the region to improve that targeting and has ongoing projects in Turkey, Georgia, Romania, and the Kyrgyz Republic, for example. When we talk about, engaging on kind of SOE reform and so on, making sure that government support is transparent and accountable. There, the World Bank has been providing technical assistance to assess the impact of state aid on market outcomes in Romania. It's also been working on strengthening competition policy design in Moldova and Uzbekistan, and reducing the role of the state and in distortions that may result from that in Kazakhstan, for example. I mean, the list goes on. We also undertake policy reforms to enable to improve exit. Their work is going on in some of like the Eastern European countries. similarly for firm entry. And we also have a work going on in terms of, ensuring that the financial sector is healthy and viable. And, in all of those areas, we work closely with, other development partners where appropriate. I know that the World Bank has, in Central Asia, obviously ties with the Asian Development Bank. In other parts of the region, we're working with the EU and EBRD, but it's really country specific in terms of what's going on. But in short, yes, the World Bank is supporting governments across the region in all those areas, and we're working with development partners where appropriate.
Great, thank you for your responses. We received a question and comment from the Professor Yoshino of the Keio University during the presentation. So let me read the question and comment. First, it's my screen. Yeah. First comment. There will be reverse correlations, namely higher the rate of return, much more firms enter the market. Better the market, competition will rise. So that's a comment from him. And the question, which policy would work better among various policies in face with the COVID-19? So that's his question. So if you would have any comments to those points from Yoshino Sensei, Dorothee, it'd be great if you can just make a comment. Thank you.
Sure. Yeah, I mean, I think competition is obviously key. We want to make sure that, there's entry of new firms where appropriate, because in the end, competition really drives long-term economic growth, as, the literature has shown. And, we contribute a small part here, kind of showing that in more competitive environments, more productive firms do better, which is eventually what we do want to see. In terms of, policies to support a more competitive environment, I think, I spoke about the 5 areas where we see certainly policy action needed in many countries. Obviously, countries in the region are at different levels in terms of their market and competition development. So, that point is well taken. But I think, overall, we see certainly room for improvement everywhere, and kind of balancing, the government support measures to support firms, even if they may have not been productive during COVID-19, in order to, to protect jobs, to avoid firms that would have otherwise been viable to go out of business, and kind of avoid some of the frictions. Those are certainly all, worthwhile points. But I think going forward, we obviously need to focus on ensuring that a competitive environment is there, so that the most productive firms survive and can drive long-term economic growth.
Great. Thank you very much for your responses. Dorothee, you very efficiently presented the report and responded to all the questions that we received. So before wrapping up the seminar, I'd like to ask you to make your final remarks or messages to the viewers in Japan. Then we wrap up the seminar.
Well, thank you. Thank you again for the opportunity to present here. I think, obviously our findings were, in some ways specific to the data for the countries we had in Europe and Central Asia. But I think overall the findings we have also are more universal, in a sense that I think, countries everywhere around the world will need to think about, phasing out government support, not just because we want support to be more targeted, but also because it's obviously, those are large fiscal resources that go towards firm support, and many countries, especially in the emerging and developing world, don't have the fiscal space to carry on those support measures forever. So I think we need to think about how we can exit this phase and refocus on a recovery. I realize many countries obviously are still dealing with COVID-19. That's true in ECA, that's true around the world. But we've also seen firms starting to recover ever so slowly, and hopefully that's going on. So as as we continue on this path towards recovery, I think thinking about how we can support a competitive environment and ensure that firms that are the most innovative, the most productive, can survive and have a level playing field will be important. So thank you very much again for the opportunity to present.
Thank you very much. In the Tokyo office side, in the middle of previous organizational change of the World Bank, for the short period of time, Tokyo office was part of ECA region for whatever reasons. And then we had an opportunity actually of attending some of the internal meetings of the region. So we have some emotional attachment to the region, historically speaking. So we would definitely like to come back to your office to ask for another round of the presentation when the next issue in spring next year comes out. So with that, I'd like to ask Dorothee for your time to present a report this morning. And thank you very much for your time. Really appreciate it.
Thank you.
Great, thank you very much. So we have one more morning seminar this week on Thursday, November 4th. Latin America and the Caribbean Regional Economic Update will be featured. Our speaker will be William Maloney, the chief economist for the region, who is rather known in Japan for his active engagement in the productivity project of the World Bank. This will start at 8 o'clock in Japan Standard Time, Thursday this week, November 4th. With that, I'd like to once again thank everyone for watching. Stay safe, stay healthy. See you later this week. Thank you.